All right, so welcome back, everyone. Today we're going to be taking a deep dive into a pretty interesting topic, maybe a little bit nerve-wracking for some folks out there.
Oh, definitely.
We're talking about the potential market impact of, a Trump return to the White House in 2025.
Hmm.
And we've got this video analysis that we're going to be digging into.
Right.
It breaks down, the different patterns that we saw during his last term
Mm-hmm.
from 2016 to 2020
Yep.
to see if there are any clues in there for, investors like yourselves.
Yeah, think of it as like we're using data almost like a time machine to try and spot those market trends before they happen.
Exactly.
Yeah.
And what's really interesting about this is that we have some pretty big landmarks to kind of guide us on this journey.
We do.
Deregulation, tax reform, the trade war with China.
Yeah, these were major things. These were defining elements of Trump's economic policy during that time.
Yeah.
And, they sent ripples, sometimes tidal waves
Yeah.
through the market.
No doubt about it. No doubt about it. So, okay, so let's unpack that first term, really focusing on those market swings.
Mm-hmm.
Can you paint a picture for us, almost like a financial highlight reel of what went down?
Yeah, for sure. So 2017, it kicked off with a roar. A full-blown bull market. Like
Right.
the S&P 500 was up over 19%.
Wow.
It seemed like nothing could stop it. And, a lot of analysts at the time, they were attributing this to a wave of optimism coming from Trump's pro-business policies. It even had its own name,
It did.
the Trump bump.
The Trump bump. It was, it's almost like like a sigh of relief from the business world.
I don't know.
Like, okay, we can breathe again,
Yeah.
But then things got a little more interesting in 2018.
Oh, 2018 is when things really, they changed.
Yeah, tell me about that.
That's when the trade war anxieties, they really started to set in. Remember, the U.S. imposed tariffs on billions of dollars worth of Chinese goods.
Right.
And China, well, they retaliated with tariffs of their own.
It was a back and forth. It was intense.
It was really a tit for tat. Trump, he was really determined, like he wanted to renegotiate those trade deals,
Yeah.
especially with China. And those negotiations, well, they didn't exactly go smoothly.
It did not.
And the market reacted just how you'd expect, with corrections.
Of course, yeah.
One even dipping nearly 20%.
Yeah.
That wiped out a huge chunk of those 2017 gains.
So investors were really feeling that trade war pain. What sectors do you think got hit the hardest?
Agriculture and tech definitely bore the brunt of it.
Yeah.
Think about it like soybean farmers, right?
Yeah.
They relied so heavily on those exports to China, they saw their prices plummet.
Yeah, makes sense.
And then you've got tech companies.
Right.
A lot of them relied on Chinese manufacturing, so they were faced with these higher costs. And, all the supply chain disruptions.
Yeah, definitely.
Remember Apple's stock, how it fell over 20% in late 2018?
Right.
A lot of analysts, they were directly attributing that to the trade war.
Ouch, yeah. So 2018, definitely a bit of a reality check after that Trump bump euphoria.
Yeah.
What about 2019? What happened then?
2019, it brought a bit of a recovery, but the market, it was still really skittish.
Okay.
The S&P 500 ended the year up 28%, which is respectable.
Yeah.
But, there were plenty of ups and downs along the way, a lot of volatility.
So like a year of, I don't know, cautious optimism maybe?
Yeah, I think that's a good way to put it.
Yeah.
And then, of course, 2020 arrived and all bets were off. Nobody could have predicted that pandemic crash. The market plunging a record 34% in just a few weeks.
Yeah, that was a massive shock to the system, a global event that really threw everyone's predictions out the window.
Mm-hmm.
But then came an equally surprising rebound.
Oh, absolutely. By the end of 2020, the S&P 500 had not only recovered from that pandemic crash,
Wow.
but it actually ended the year up 16%.
Talk about a roller coaster.
I know, right?
So, okay, so we've got this historical backdrop.
Right.
The boom, the trade war turbulence, the pandemic free fall,
Right.
and then that surprising rebound.
Yeah.
How does it connect all of this to what might happen if Trump gets back in office in 2025?
Well, they make this argument that, history, it may not repeat itself exactly, but
Yeah.
it often rhymes.
Okay, yeah.
And by looking at how the market responded to Trump's policies in that first term, things like deregulation,
Yeah.
we can maybe glean some insights into those potential scenarios for 2025.
Interesting. So let's start with deregulation, because I remember Trump was really aggressive with that, especially in 2017. There was that rule, wasn't there, that for every new regulation, 2 old ones had to be scrapped?
Yeah, the 2-for-1 rule,
Yeah,
remember?
the 2-for-1 rule.
It was pretty unprecedented, led to this enormous reduction in those federal regulations.
Huge, yeah.
I mean, the Trump administration, they boasted about
They
it.
did, yeah.
They said that they had eliminated 22 regulations for every new one they added,
Wow.
significantly exceeding their initial goal.
Right.
Now, whether that was a good or bad thing, well, it depends on who you ask.
Yeah, sure.
But it definitely had an impact on certain sectors.
For sure, for sure. So how did the market actually respond to this wave of deregulation? Aside from that, initial Trump bump enthusiasm, did it actually translate into, tangible benefits for businesses?
For some, it really did, particularly in sectors like finance, industrials, healthcare.
Okay.
Those industries, they tend to be heavily regulated. So
Sure.
at least in theory, rolling back those regulations, well, it freed them up, right?
Yeah.
To operate more efficiently and potentially boost their bottom line.
Can you give me like a concrete example?
Sure. Take the financial sector, for example.
Okay.
In 2017, the S&P 500 financial sector, it surged by over 50%.
Wow.
Far outpacing the broader market.
Right.
Now, that wasn't entirely due to deregulation,
Yeah.
but a lot of analysts at the time, they pointed to relaxed banking regulations,
Yeah.
specifically the rollback of certain Dodd-Frank provisions,
Oh.
as a significant factor in that growth.
So for investors that are watching this and thinking about this, could a renewed focus on deregulation in a second Trump term bring those similar benefits to these traditional industries? Or is that too simplistic of a view?
It's definitely a possibility worth considering. I mean, if Trump follows a similar playbook, we could see those traditional heavily regulated sectors, they could get a boost. And, this video analysis we're looking at, it highlights this as a potential trend to watch.
Okay, so deregulation potentially good for some of those established players.
Right.
But what about those newer industries like AI that are just starting to take off? Could deregulation be a game changer for them too?
That's where things get really interesting. I mean, imagine the potential for innovation if emerging sectors like AI were suddenly freed from these regulatory burdens. I mean,
Yeah.
it could lead to this surge in investment and development, potentially accelerating their growth even further.
Right.
The video even speculates that this could be like a key area for market growth in a second Trump term.
That's an exciting thought, especially for those folks out there that are already invested in or maybe considering investing in AI. It's almost like deregulation could be a double-edged sword, right?
Yeah.
Impacting both those established giants and those up-and-coming disruptors.
Right, and that's what makes this so compelling from an investor's perspective, I think.
Yeah.
It's not just about predicting, will the market go up or down?
Yeah.
It's about understanding these nuanced dynamics.
Yeah.
And how they might play out in different sectors.
Absolutely. Okay, this is fascinating stuff. Let's shift gears a bit and talk about another big move from Trump's first term. Those massive corporate tax cuts.
Oh, yeah.
That was a huge deal back in 2017.
Huge deal. I mean,
Yeah.
the Tax Cuts and Jobs Act of 2017.
Right.
That was a signature achievement for Trump.
It was.
Slashing that corporate tax rate from 35%
Yeah.
down to 21%.
Huge.
It was a long and contentious legislative battle, let me tell you.
It was, yeah.
But he got it through Congress.
Yeah, I remember it being a real nail biter.
It was down to the wire.
Yeah, a lot of back
Right.
and forth.
Oh, yeah.
But ultimately, what was the impact of those tax cuts on the market? Did it live up to all the hype?
Well, I think it definitely had a psychological impact.
Okay.
Just the promise of lower taxes, I think that was enough to fuel that market optimism, at least in the short term.
Right. So it was kind of like a shot of adrenaline for investors.
Totally.
Yeah. Everyone was so excited about the prospect of companies having more money to invest and grow
Yeah.
and potentially boosting those earnings and share prices.
Right. And to be fair, the tax cuts, they did have a real impact on corporate earnings.
Right.
A lot of companies saw their profits increase.
Sure.
And some of that extra cash was, it was used for stock buybacks, which can also drive up share prices.
Of course. But wasn't there also a lot of criticism, even from some folks within the Republican Party, about whether those tax cuts would actually benefit the economy in the long run?
Oh, absolutely. There was, I mean, some argued that the cuts, they disproportionately benefited wealthy corporations and individuals while doing little to actually help the middle class. And then you had others who were worried about, the long-term impact on the national debt.
Right, right. So a lot of debate and a lot of mixed opinions there, which I guess is pretty typical of any, major policy change.
Yeah.
But here's where things get even more interesting. Trump is now proposing to slash corporate taxes even further,
I know.
down to 15%.
It's bold.
It's a bold move, especially considering, the current economic climate.
Right.
It's almost like a sequel to that 2017 tax cut drama,
Yeah,
but with even higher stakes.
definitely higher stakes.
So how could this new proposal potentially impact the market?
Well, it could reignite that sense of optimism that we saw in 2017, at least among those investors that believe, that lower taxes will lead to those higher corporate profits. But it could also trigger another wave of volatility.
Right, because nothing spooks the market like uncertainty.
Exactly.
And let's face it, the political landscape is even more polarized now than it was in 2017.
Oh, yeah.
So getting this kind of legislation passed, I mean, it could be a real uphill battle.
A real uphill battle. And the video analysis that we're looking at, it actually emphasizes this point. It suggests that investors should probably brace themselves for some potential short-term volatility, even if the long-term outlook is more positive. It's that classic dilemma, right? You're weighing the short-term risks against those potential long-term rewards.
Right, right. Okay, so we've got deregulation, tax cuts, both potentially impacting the market in complex ways.
Right.
But let's not forget about that other major economic storyline from Trump's first term, that trade war with China.
Oh, yeah.
I mean, those tariffs were a big deal.
Big deal. Arguably the most dramatic economic policy of his presidency, I think.
Yeah.
And it definitely had a major impact on the market.
Okay, so remind me exactly what happened with those tariffs. It felt like every week there was a new headline about, escalating tensions between the U.S. and China.
Oh, it was a real tit for tat situation.
Right.
Trump imposed tariffs on hundreds of billions of dollars worth of Chinese imports.
Right.
And it covered this wide range of products from, steel and aluminum to electronics, consumer goods, you name it.
And China wasn't just going to sit back and take it.
No, they retaliated. They imposed tariffs of their own on American goods, particularly agricultural products, like soybeans and pork.
Okay.
And you got to remember, China is a major buyer of American agricultural products, so those tariffs, they really hurt American farmers.
It really was like a game of economic chicken.
It was.
With both sides trying to outmaneuver each other.
Mm-hmm.
And what was the overall impact of this trade war on the market, besides those corrections you mentioned earlier?
Well, it definitely created a lot of uncertainty and volatility. I mean, businesses didn't know what to expect, investors were nervous, and the market reacted accordingly, swinging wildly in response to every new headline about trade negotiations or tariff announcements.
Right. It felt like everyone was just holding their breath, waiting to see who would blink first.
It did. And the video analysis that we're looking at, it points out that while some investors were able to capitalize on those short-term swings, for a lot of folks, the trade war just added another layer of risk and complexity to an already challenging market environment.
Yeah. So could a Trump return in 2025 mean a return to those trade war days?
That's the million-dollar question, isn't it?
It is, yeah.
It's one that, investors are understandably concerned about.
Of course. Because if history rhymes,
right,
and Trump's, rhetoric on China hasn't exactly softened, it's not hard to imagine a scenario where those trade tensions flare up again.
You're right, but here's the thing. It's not just about what Trump might do. We also have to think about how China might respond. Remember, I mean, they've shown that they're willing to play hardball, and they've become even more assertive on the global stage since 2019.
So it's almost like a geopolitical chess match with each side trying to anticipate the other's moves.
Yeah, exactly. And for investors, that means paying close attention to not just economic indicators, but also to that broader geopolitical landscape.
Yeah.
Because, in this interconnected world, politics, economics, they're intertwined.
They are, absolutely. Yeah, it really is like a high-stakes game of chess, except the pieces are entire industries.
Right.
And the board is the global economy.
Exactly.
But let's try to make sense of all of this for our listeners. If we're looking ahead to 2025, what are the big takeaways from Trump's first term that investors should really keep in mind?
I think the overarching theme here is that while Trump's policies, especially, deregulation and tax cuts, they did present some real opportunities for investors.
Yeah.
They also injected a lot of volatility into the market.
Mm-hmm.
It was a bit of a wild ride.
Right.
Sharp ups and downs, not for the faint of heart.
Right, like that financial roller coaster we talked about earlier.
Exactly.
But knowing what we know now, are there any specific signs or signals that investors should be watching for, as we head into a potential second Trump term?
Absolutely. I'd say the first thing to watch for are those policy announcements and legislative milestones. Remember, those often act as triggers for market movements.
They do.
So, for instance, if Trump pushes hard for another round of massive tax cuts,
Right.
and it looks like he might actually get it through Congress,
Yeah.
well, we could see a surge in market optimism similar to what happened in 2017.
So stay informed
Yeah.
and be ready to react because those headlines can move markets fast.
Oh, yeah, for sure.
What else should investors be thinking about?
Well, don't forget about sector-specific analysis.
Right.
Think about those industries that are most likely to benefit from potential deregulation and tax cuts.
Okay.
We've already talked about finance and healthcare, and those could certainly see another boost.
Right.
But don't underestimate the potential of emerging tech, especially AI.
Right. AI. It's already such a hot area.
It is.
And if those regulatory barriers are lowered,
Mhm.
it could really explode.
Oh, yeah.
It seems like investors would be wise to at least have some exposure to that sector.
I would agree.
Any other sectors that might be worth watching closely?
Well, if the trade war with China heats up again, which, is a distinct possibility,
Yeah.
that could create both risks and opportunities.
Okay.
Certain sectors like manufacturing and agriculture, they could be hit hard by tariffs and trade disruptions.
Right.
But other sectors, like those focused on domestic production
Okay.
or alternative supply chains, might actually benefit.
So it's not just about betting on the overall market direction.
Right.
It's about understanding those sector-specific dynamics
Exactly.
and how they might be impacted by these potential policy shifts.
Yeah, it's like playing a multi-level game of chess.
It is. It really is.
And that's why it's so crucial to stay informed, do your research, and really understand, the potential risks and rewards of different investment strategies.
Okay, so stay informed, be strategic, and maybe have a little bit of an adventurous spirit
Yeah,
because it sounds like things could get pretty wild.
it could get a little crazy, but remember, with risk often comes opportunity.
That's true.
Those who are able to navigate those choppy waters,
Yeah.
those who are prepared and adaptable,
Right.
they're often the ones who come out ahead in the long run.
Okay, I'm sensing a key theme here and maybe a bit of a warning too. Buckle up because things could get bumpy.
Yeah.
But on the flip side, there might be some amazing buying opportunities
Oh, for sure.
for those who are prepared.
Absolutely. And that's why it's so important to not just react to events, but to try to anticipate them.
Right.
To think a few steps ahead like a grandmaster in that chess game we were talking about.
That's a great analogy, thinking like a grandmaster.
Okay.
Okay, so we've covered a lot of ground here,
We have.
but I want to leave our listeners with one final thought-provoking question,
Okay.
something to really ponder as they continue their own deep dive into this topic.
I'm all ears. What's on your mind?
Well, we've talked a lot about how history often rhymes.
Right.
But here's the thing. 2025 won't be an exact replica of 2017.
Right.
The world has changed, the political landscape has shifted, and new challenges have emerged.
For sure.
So the question is, what unique factors, things that maybe weren't as prominent in Trump's first term, could amplify or mitigate the market impact of these recurring themes?
That's a brilliant question. And honestly, I don't have all the answers, but that's what makes investing so fascinating.
Yeah.
It's not just about crunching numbers and looking at historical trends. It's about trying to understand the bigger picture,
Right.
the complex interplay of forces at work, and making informed bets on the future.
Right. It's almost like we've given our listeners a map and a compass.
Yeah.
But the real adventure begins when they start exploring the terrain themselves,
Right.
making their own discoveries and charting their own course.
I love that analogy, a map and a compass for navigating the financial landscape. And the beauty of it is that every investor's journey is unique. Their goals are different, their risk tolerance is different, and their understanding of the market is constantly evolving.
Absolutely. Okay, so to our listeners out there, keep exploring, keep learning, and never stop challenging your assumptions. We've given you some historical context and some potential scenarios to consider.
Right.
But the real deep dive begins with your own research and analysis.
Dive deeper into those sectors that pique your interest, stay abreast of the latest policy developments, and most importantly, think critically about how those developments might impact your own investment strategy.
And remember, there's no one-size-fits-all approach to investing.
Right.
What works for one person might not work for another. It's about finding what makes sense for you, your individual goals, and your own unique perspective on the market.
Well said. And that's why it's so crucial to not just follow the crowd or blindly trust the so-called experts.
Right.
Do your own homework, ask questions, and develop your own informed opinions.
So be informed, be strategic, and most importantly, be confident in your own decisions.
And never be afraid to adjust your course as new information emerges.
Right.
The market is constantly changing, and the best investors are those who are adaptable and willing to learn from their mistakes.
I love that adaptability and a willingness to learn. Those are qualities that will serve investors well in any market environment,
Oh, yeah.
but especially in one as potentially volatile and unpredictable as a second Trump term.
Absolutely. And remember, investing is a marathon, not a sprint.
Right.
It's about making smart, informed decisions over the long term,
Yeah.
not chasing short-term gains or panicking when the market takes a dip.
Okay, so we've laid out the potential landscape, the historical context, the key themes to watch. Now it's up to our listeners to take this information and run with it, to continue their own deep dive into this fascinating and potentially lucrative territory.
And we'll be here to guide them along the way, offering insights, analysis, and hopefully a bit of entertainment, too.
That's right, because after all, investing shouldn't be a chore, it should be an adventure.
Well said. And who knows, maybe in a few years, we'll look back at this moment and say, remember when we were trying to figure out what a second Trump term might mean for the market? It was a wild ride, but we learned a lot along the way.
I have a feeling that's exactly what we'll be saying.
Yeah,
But for now, let's leave our listeners with one final thought to ponder.
I'm intrigued. What is it?
If history rhymes, as we've been saying, then what unique aspects of the current moment, the things that set 2025 apart from 2017, could really amplify or mitigate the market impact of these recurring themes?
That's a great question to leave our listeners with. It's all about connecting those dots, understanding those nuances, and ultimately making informed decisions based on the best available information.
Exactly. And sometimes the most valuable insights come from asking the right questions, even if we don't have all the answers just yet. So to our listeners out there, keep those brains engaged, keep those portfolios diversified, and most importantly, keep those spirits high.
And until next time, happy investing.
You know, it feels like we've covered so much ground already, but it also feels like we've only just scratched the surface.
Yeah, it's true. I mean, predicting the market it's like trying to predict the weather.
Right.
You can look at those historical patterns and you can look at current conditions, but, there are always those unexpected gusts of wind that can throw everything off course.
And in this case, those gusts of wind might be things like, geopolitical tensions,
Right.
technological breakthroughs, or even just a surprise tweet that sends the market into a frenzy.
Oh, yeah. Speaking of those surprise tweets, that's definitely something to consider, in the context of a second Trump term.
Oh, absolutely.
I mean, remember how much market volatility was driven by his social media pronouncement?
Oh, yeah. Felt like every time he tweeted about trade or tariffs, the market would go haywire.
It would.
Yeah, investors were constantly on edge trying to decipher his every word.
It was almost like a real-time market commentary,
Right.
but with, 280 characters or less,
Right.
and often with unpredictable consequences.
Yeah. So for investors who might be feeling a bit overwhelmed by all of this, what's the key takeaway? What's the one piece of advice you would give them as they navigate this potentially turbulent landscape?
I think the most important thing is to not get caught up in the short-term noise.
Okay.
Don't let those daily headlines or, those surprise tweets dictate your investment strategy.
Yeah.
Instead, focus on the long-term fundamentals, on those underlying economic forces that drive market growth over time.
Right. It's about seeing the forest for the trees.
Yeah.
Focusing on those big picture trends rather than getting distracted by every little blip on the radar.
Exactly. And remember, the market has a way of rewarding those who are patient and disciplined. Those who can tune out the noise and stick to their plan, they're often the ones who come out ahead in the end.
Okay, so be patient, be disciplined, and try not to panic when the market inevitably throws a curveball.
Yeah.
Any other words of wisdom before we wrap things up?
I just add that it's also crucial to stay informed and be adaptable.
Okay.
Keep learning, keep challenging your assumptions, and don't be afraid to adjust your strategy as new information emerges. Because in a market as dynamic and unpredictable as this, One, flexibility is key.
I love that stay informed, be adaptable, and never stop learning. That's a great mantra for any investor, no
Yeah.
matter what the market throws our way.
Couldn't agree more. And remember, investing is a journey, not a destination. It's
Great.
about making smart, informed decisions over the long term, learning from your mistakes and enjoying the ride.
And on that note, we'll wrap up this deep dive.
Sounds good.
We hope you found it informative, insightful, maybe even a little bit entertaining.
Yeah, we've certainly enjoyed exploring this fascinating topic with you.
And to our listeners out there, thank you for joining us on this journey. We encourage you to continue your own exploration, to delve deeper into those areas that pique your interest, and to never stop asking those thought-provoking questions.
Because ultimately, the best investment decisions are the ones you make with confidence and conviction based on your own understanding of the market and your own unique investment goals.
Well said. So until next time, happy investing.